Hi and welcome to the Market Alert for Thursday, the 27th of June 2024. So vanished tech shorts and geared hopes, and Nasdaq short interest in full crash mode. So that's interesting to hear. So obviously the traders are all piling in on the short side, anticipating something coming. Large cap stocks support indices while yen slumps and keeps the dollar bid. Yeah, the dollar was up yesterday. US stocks eked mild gains in range-bound trade as catalysts remained light. So not much news is what it's saying there. And Bank of England Governor today speaking at 10:30 a.m. 1:30 final GDP from the US. That's forecast to rise from 1.3 to 1.4. Unemployment gains. And then core durable goods orders, and final GDP, and then pending home sales as well. Now that's an interesting one. It was minus 7.7 before, and they're forecasting 0.6 increase on that one. And durable goods is switching the other way, 0.6 to minus 0.5. So yeah, it'll be interesting afternoon from 1:30 today. Right, let's get on, have a look at the markets and kick off with the Dow. And in the Dow yesterday, we can see that we traded back down to the 50 EMA and the 20 normal average there, as prices found a bit of support sideways to higher off this overnight. We can see how quiet it was yesterday. Market down until the Dow opened, and then we came running all the way back, ran out of steam at just above the 50 EMA and just below the DP. Notice how the 200 moving average there stopped the market from moving higher. Overnight the market saw a bit of selling, but this has now disappeared for the time being, and the market needs to close above the 20 bar, the 50 EMA, the close, and the psychological level there of 39,100. Meanwhile, in the German DAX, starting to develop that summer sideways move, as can be seen there. Prices were up, then they were down, then they came off the lows. More detail here, the market moving up to the R2 where it ran out of steam, and then it just sailed all the way down to the previous day's low, down to Tuesday's low there. Found some support there, got a lot of volume there, and then prices moving back up, but then trading sideways, down slightly overnight and trying to get back or stay above the close. It's got the 200 MA in the way of the psychological level there, and also the DP as well. So if prices attempt to move higher, it's got a bit of resistance, and also of course the 50 EMA there as well. Meanwhile, in the S&P, also in a sideways range, say it's that time of year, and sideways to higher. Then also the same picture yesterday, the electronic market breaking down for the S&P till we got to the cash market, bringing the market back. But overnight, prices trading down and testing yesterday's low before coming off this, and now trying to move to the upside. However, the only average that's in its favour at the moment, or two actually, you've got the 5 and the 20. It's got to get through the 50, the 200 and the DP in order to move higher. In the FT100, also a down day as well, again building that sideways move. We're 1 week away from the UK election as well, week today. 30-minute chart, again starting off with gusto and then moving all the way down to the low of Tuesday. Bit of a bounce there in the afternoon, but then prices sliding down to yesterday's low on the overnight market and currently sitting on the close. Again, the averages in the opposite direction there. The market only closing above the 5 bar moving average at the moment, but trying desperately to get through that 20 to head to the 50 and the DP there. In the US dollar, pressure on the yen, buoyancy for the US dollar there, so that's had an impact on the metals market. So let's have a look at those. And kicking off with silver, as I said yesterday, we're going to come down and test the lows. Today we're going to break through these lows and head down to 28. The market's got the excuse this afternoon with the news. Watch this happen around lunchtime. And in fact, that just raises a point about the manipulation of the silver markets. And let me just find this for you. Okay, so this is a video recorded by a chap called Mario. Monaco64 is the channel. 102,000 subscribers. Former bond trader in the city of London. And he's in this particular video that he put out, when was it? Yesterday. He talks about how, I don't know where he got it from, it's obviously a WikiLeaks thing there, but about how they were going to suppress the price of silver by keeping it volatile and keeping the public out. So well worth a watch. I'll put a link into the description and also the email that I send out, but well worth a listen to this. So it's not just me that's can blatantly see what's going on and why it's so undervalued, but you'll see why in 1974 the US government decided to start manipulating the price. So well worth a watch if you get a few minutes. So back to the charts, like I say, I would expect this to be no problem at all for the news that was out today to move it all the way back down to at least $28 an ounce. So it's only 50 cents away anyway. 70 cents at the moment, but yesterday traded down to, let's just grab what this low is. It did go down to 50, yeah, 55. So yeah, 28, not a problem at all, and then possibly lower as well, despite the demand, as I keep saying, that is required. So yeah, onwards and upwards with the manipulation. There you can see a very choppy session yesterday. They slammed the market down. Typical London fix. And again, when you listen to Mario's video, you'll see exactly how many percentage of the time they actually do this. There is a pattern, and that's not just normal at all. Meanwhile, in gold, stuck in a sideways range, also hammered down yesterday as well. So it's down at 230 at the moment. So sorry, 2,300, and that could quite easily move lower as well, so that the central banks can acquire more cheap gold. Anything to stop the public. That's what they do with the metals. So you get in and then it gets battered, and then you think, I'm not going in this, it's too volatile. When in reality it shouldn't be. It really shouldn't, because there's no third party risk, and yet in the stock markets and everywhere else there is huge risks, but it doesn't matter, does it? Where there should be no third party, where there isn't any third party risk, as in gold and silver, there is manipulation. Incredible. And 30-minute chart there, you can see the slam as well. Usual time, 1:30 to that sort of between 1 and 2:30, just classic. Right, let's have a quick look at the gold silver ratio. This is again moving up. Yesterday, on Tuesday, Wednesday, just down slightly, but it'll be making its way up. As I said, the trend has changed in the gold silver ratio, which I pointed out in yesterday. So you can see we've got a new upward trend heading back up towards that 88 level for sure. And in Shanghai, it's still $32.66, whereas in the London fix it's $28.84, and that again is blatant manipulation by using the futures contracts. So let's have a quick look at yesterday's trading session and what the DAX did. So we kicked off with the market moving higher. Market moved higher. It put a sell signal in first, right on the 50 EMA there. It was filled, and then the market reversing off this. The long was good though, so we just kept trading along with it, and all the way up to here. I decided to got out too soon, and the market continued off without me to the R2 level, so left about 20 odd points on the table there, but not to worry. Prices then started to move lower, and lower did they go all the way through, down past the high and down to the low. And why this happened, I do not know. It just seemed that everybody came in and sold. It wasn't a massive sell-off. It was a very controlled demolition of prices. And then in the afternoon we see the market moving higher, waiting for the US news, and then we get another, unfortunately, the market fills on the sell side, and then they bring the market back, as can be seen there, and move it back towards the DP and back towards the 200 MA there, which until I turn the recording off at 1650. So overnight prices are sitting by the close. Let's have a bigger picture of where we are. So yeah, close above the 200 MA, which you can see there. Let's just zoom in. So the average is all in the right order, just a bit of a pullback going on there. So the market's got the setup there. The only thing it needs to do is to get above the DP. Price is trading above the daily pivot, are considered bullish, below bearish, but the close seems to be helping this market at the moment as well. So yeah, again, just a wider shot here. We're not too far off the low. Certainly a long way off yesterday's high, which you can see there, which would be 100, 200 points to get to there. On the downside to the low, we're looking at 100 points. Right, that will do it for this one. And let's see what the American news has to say this afternoon. Other than that, as ever, thanks for watching. See you in the next